Hello everyone, welcome back to my YouTube channel Sachin Education Hub. Friends, today we are here to discuss about the scope of financial reporting. This is a very important topic for the purpose of exam, especially for the students, and as well as a very crucial topic for the investors and the businessmen, right? So very firstly, financial reporting, what it means. Sir, financial reporting is just about the snapshot of the financial performance and the positions of the company. Or what is the financial health of the company? What is the financial performance of the company? If you want to check, you have to be check the financial reportings of the company. So a report that show the financial health or the performance of the company is just about the financial reporting. Okay. So what are the things that come under the financial reporting? That is the scope of financial reporting. As you see in the PDF, in India, the scope of financial reporting is just defined by the accounting standards. So financial reporting is just about the accounting standards or the regulations that are given by ICAI or the MCA, right? If you want to break this line one by one, then what are the main steps that is come under the scope of the financial reporting? So very first is Companies Act 2013. Very first important thing that is come under the scope of financial reporting is Companies Act 2013. So Companies Act 2013 serve as a foundation for the financial reporting in India. And this legislation outlined that the legal framework that the company must follow in preparing and presenting their financial statement should be discussed in this case. Or you can say that it is mandatory for the preparation and presentations of the financial statement that in preparing we have to be follow the applicable accounting standards. We have to be follow the applicable accounting standards. And it is just the starting point to understand the obligation of the companies that have to be followed in this case. So this is a very important point that is come under the scope of the financial reporting first of all. And the second thing is applicability of the Indian accounting standards. Second main scope that is come under the financial reporting is Indian accounting standard, in short Indian AS. So as you know, very familiar with the IFRS, that is International Financial Reporting Standards. Similarly, like that in India, there are some own version accounting standard, that is Indian accounting standards, that should be aligned with IFRS in today's time for the smoothness of these accounting standards. We want global convergence of these accounting standards in today's time just because of the uniform set of accounting principles for all the companies in the world, or the same set of accounting principles for all the companies in the world, which is very difficult process or a challenging process, but we have to be follow this thing just because of the transparency and many other benefits. So what is actually come under the scope of financial reporting? It is just about the Indian accounting standard. Indian accounting standard are the main important point or main important step that is come under the financial reporting, because without these accounting standards you can say that it is incomplete financial reporting. So if you are not following the Indian accounting standard, then it means financial reporting is bad. Or you can say that financial reporting doesn't mean that it is accurate, doesn't mean that it is reliable, or it is worse to say that financial reporting is nothing. Okay, so second important point is very must to be the part of scope of financial reporting. Third main thing is financial statement. Financial statement. Companies are required to prepare a set of key financial documents, that is including balance sheets, profit and loss account, cash flow statements, and details note to accounts. And these statements should have an aim to give the comprehensive view or the clear view about the company's position and the performance. So whenever you are following the financial reporting, or whenever you are doing the you are preparing the financial report, then it must include the financial statement that must have balance sheet, P&L, cash flow statements and note to accounts. And very most important thing is clear and comprehensive view, that is a true and fair view about these financial statements should be disclosed in your financial reporting. So this is the another important point that is come under the scope of financial reporting. Next thing is CFS, that is a consolidated financial statement. That is a consolidated financial statement. This is another layer that is come under that are covering the financial reporting. So financial reporting should cover the CFS, and the companies must prepare consolidated financial statement that combine the financials of the parent company with its subsidiary. Very firstly, the companies must prepare the CFS that combine the financials of the parent company with its subsidiary, because it helps or it provides the stakeholder the holistic view. It provides the stakeholder a holistic view about the company's financial health or the company's financial performance in very detail. So if you are talking about the consolidated financial statement, then the company should have to be prepared these statements if the company have their subsidiaries in any other country or in any other cities of the country, right? So if the company is preparing its CFS according to the Indian accounting standard or according to the applicabilities or according to the regulations that are given already in the Indian accounting standards, then it helps the stakeholder to get the decisions or to get the holistic view of these financial statement or financial performance of the company in a very easy way. So CFS must be prepared by company for the better benefits in the future. Next point that is come under the scope of financial reporting is audit and auditor's report. Audit and auditor's report. Ensuring the reliabilities of the financial information is very crucial step. Is it right, sir? And that is the step we need a audit. That is the only step we need a audit, because to get the reliabilities about the financial information, as you know, this is a very crucial step, and this is the only thing this is the only step we need a audit therein. And companies that are engaged in qualified auditors to examine their financial statement, and it must want that the auditor should give an independent opinion in this case. So what it means, you can say that in a very easy way or in a very easy manner, audit and auditor report should also be the part of financial reporting, or it is also come under the scope of financial reporting, just because whenever there is a need of ensuring the reliabilities about the financial statement, the auditor's role should be come in, or there is a need of audit in this case. And wherever the auditing is necessary, audit report should be the part of it. So that is the main thing, also come under the scope of financial reporting. Next important point is compliance with accounting standard. As you know, we already covered the point that is Indian accounting standard. So the next point also is just like same as that. Consistency is very important, and consistency is the key to success as well in the accounting standards. So company must be adhere, or company must be follow the accounting standard that are led out by the that are led out by the ICAI, that is Institution of Chartered Accountant of India. Whatever the accounting standard that are given by ICAI, the company should be required to comply with these standards, just because if the company follow these accounting standards for the purpose of recognition, measurement, presentation and disclosure of various financial statements, then it helps to give the better view or the comprehensive view of the financial performance or the financial health of the company, and that gives the better reputation in the hand of investors as well about the company. So this is another point that should be come under the financial reporting scope or the financial reporting elements. Okay. And the second last point that is come under the scope of financial reporting is going concern concept. This is a very familiar point, and you know all about that. The assumption here is always that the company will continue their operations into foreseeable future. This is about the going concern concept, right? So the financial statement that are prepared by the company should be on the going concern basis. That should reflect the beliefs that the company will remain as the company will be remain a viable entity, or you can say that company will remain a profitable entity in future, or company will remain a better entity in future. So if you are following the financial reportings, if you are doing the financial reporting, or if you are reading about the financial reporting scope, then the going concern concept, that is also the principle of the accounting, or the concept and convention, or the part of concept and conventions of the accounting, basic accounting, should be come under the financial reporting as well, because going concern concept assumption is very important part for the financial reporting. So the financial statement that are prepared on the going concern basis is clearly showing that the company will be continue its operation in the foreseeable future, and it underlines the importance of the assessing company's ability to continue as a viable entity, or the better entity, or the profitable entity in future. Okay, comparative information. What is comparative information? That means comparison with the previous period. So the financial statement should not only provide information for the current period, but also include the comparative data from the previous period. And what is the benefit of this case? This allows the stakeholder to analyze about the financial performance and the positions of the company over the time. So also the another important point should be covered under the financial reporting, because if the financial reporting cover the comparative information, that is a data about the previous period, then it allow the comparisons for the stakeholder, and this comparison help the stakeholder to analyze the company's financial performance very easily, and the positions of the company's financial performance very easily over the time. So this is all about today, and this is all just about the quicker overview of the scope of financial reporting. I hope you all understand this topic very easily. If you found this video very helpful for you, and so please don't forget to like and share this video. And very importantly, if you are new in the channel, then also subscribe to our channel, and especially the bell icon have to be pressed, because the new updates you will get only with the bell icon if you pressed with the all notifications. Okay, so this is all about for today. Thank you so much, and if you have any query, feel free to drop any questions or comments down below. Until the next time, stay happy, stay safe.